You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The futures markets can be downright scary. Limit up, limit down. What the heck is RBOB anyway? Are they going to dump a truckload of soybeans on your front lawn if you click the wrong button? Come to think of it, maybe you should just stick to your comfort zone. Or you can break out of it with the Futures Rundown. The Futures Rundown is here to help you make sense of these scary markets. We'll analyze all the top futures trading activity, explore the ins and outs of your favorite products, explain exactly how futures work, and hear from leading experts in the futures markets. We'll even tackle all of your wildest futures trading questions. If it involves futures, then you'll hear about it on the Futures Rundown. The Futures Rundown is brought to you by T4 Futures and Options. Elevate your trading experience with the T4 Futures and Options trading platform. Whether you prefer desktop or mobile applications, T4 delivers low latency and professional-grade functionality for both traders and brokers. Take advantage of theoretical sheets, strategy solver, MBO, advanced charts, and a suite of powerful features to enhance your trading strategy. Visit ctsfutures.com or search for T4 Futures and Options on Google to register and get a free month. And now, it's time to break into the futures markets. It's time for the Futures Rundown.
All right, everybody, that music means it is Wednesday, not just Education Wednesday here on the network. Nope, it is also Futures Wednesday. Now, of course, it is ever since we launched the Futures Rundown late last year. Thanks to all of you who've been joining us here on this Futures journey on the network. It's been a fun journey for me. Hopefully, it's been a fun journey for you. I see a lot of the numbers, so I know a lot of you are having a good time out there on the Futures Rundown. I also hear from you folks out there. You folks are enjoying yourself a little bit of the taste of the old futures, so keep it up. Of course, if you want even more great content that covers futures and everything else, head on over to the pro, theoptionsinsider.com/pro, the place to go to learn more. In fact, speaking of futures, we did a whole deep dive into futures yesterday on the Pro Q&A with Kevin Green. That was a fun one. Nat gas, crude oil, equity indexes, crypto, all of the above, and a whole bunch more VIX. VIX futures, you name it. We went deep into futures, probably one of the more future-centric we've had in a little bit. So if you like futures, there's more waiting for you over there on the Pro, theoptionsinsider.com/pro. We'll also get you Options Oddities, which has just been a banger of late, if I do say so myself. I'll also get you access to the Pro podcast feed. A lot of great stuff waiting there for you. 500 episodes nearly, as well as, of course, giveaways. And, coming up on the February Pro Trading Crate. Should be a good time. Check it out, theoptionsinsider.com/pro, as we check out who's joining us on the old Futures Rundown today. I'm pleased to welcome on, for the first time this year, at least on the Futures Rundown, our old pal, Miss Carley Garner from DeCarley Trading. Carley, welcome to the Futures Rundown for the first time this year, madam.
Hi, Mark. Thank you. Yeah, it's been a little while.
How are things out there in DeCarley land?
You know, we are staying pretty busy. Obviously, the markets are moving. There's no shortage of excitement. So we're surviving. That's where we're at.
Speaking of excitement, I hear there was some excitement in your neck of the woods over the weekend. Big Show was in town. I was going to go out to do it. Alas, other things intervened at the last minute. But how did your session go? What did you talk about to the folks out there this weekend? Was it all futures?
You were missed. But it was a good time. So it was the Las Vegas Money Show was this weekend. I spoke on Monday, and it was interesting. We talked a lot about gold. I happen to think, I know this is a very unpopular opinion, but I think the gold market is kind of an accident waiting to happen. They let a lot, it's easy to buy bullion or physical gold, but it's not very easy to sell it. And I think people are going to go to the futures markets and sell to basically offset their price risk. And I think it might get a little interesting. So we'll see how it goes.
An accident waiting to happen. Well, tell us how you really feel. I know from the past, I haven't been there in a while in some of those events, but I know there are more than a few gold and precious metals bugs lurking around. So you may have stepped on some toes with that comment, Carley.
Listen, sometimes I'm wrong, but I call it how I see it and let the chips fall, and that's how I see it. There's also a lot of oil drillers at those types of events, and I generally unknowingly step on their toes as well.
A lot of fun to be had, and we're gonna have some fun on the show here as well as we head right on into the trading pit.
It's time to break down all the action that's lighting up the futures markets this week. What's limit up and what's crashing and burning? Let's find out. It's time to enter the trading pit.
All right, everybody, time to get into the trading pit. We'll get to all this week's movers and shakers in a second, but really quickly at the top of the show, we have chatted with you on TWIFO, obviously a somewhat different audience. They are sister shows here at the end of the day, so there is some spillover, of course. But for those folks mainlining the futures rundown out there, as you look back on the mad year that was 2024 from a futures perspective, what really stands out and resonates to you?
2024, well, I mean, obviously there was a political landscape that was a little bit rocky. So the markets that we were really focused on were crude oil, the drill baby drill mantra, and how that affected the market. Obviously, that story is still playing out in 2025. And we also had some pretty big moves in live cattle. There may or may not be a lot of cattle traders here, but cattle prices have just come off all-time highs, and it's been a pretty interesting journey. So we're looking forward to 2025. We think the markets that were the big stories in 2024, particularly live cattle, coffee, are probably going to be they were the winners in 2024. They may be the dogs of 2025, but we will have to see how it plays out.
Our live chat is certainly responding to your gold comment, as I thought they would, Carley. So there's all sorts of debate going on about that. A lot of them are saying they agree, they think it's scary. Others are kind of interested in it. So you've definitely piqued their curiosity, Carley, which I'm sure was the intention. As we head out in there, listeners, let's see what's lighting up the market this week on the futures side, listeners. Let's go green first. Why not? I'm feeling charitable, listeners. And we'll start with good old steel, U.S. Midwest steel, the March future up nearly 4.5% just this week. We were talking not that long ago, not to mention the pro again, but we had a great chat about some upside in Cleveland Cliffs not too long ago and some great covered calls that were available out there. If you took advantage of those, it's been a banger. And U.S. Steel reflecting that, of course, a lot of this driven by the tariff talks out there, tariffs, the talk of the land out there right now. So steel, at least U.S. Steel, benefiting from that right now, which is, of course, the intention at the end of the day, up about 4.5%. Number 4, we have ethanol, listeners. Also, the March contract up 4 2/3%. Remember when ethanol was all the rage? Just seems like just a few years ago, listeners. Then everyone realized, maybe it's not the best thing in the world to take all of our crops and just throw them into our gas tank. It may not be the best thing for crop prices and the world and gas and everything else. So it had a brief fleeting moment in the sun, but it's still rocking and rolling out there. Ethanol, the March contract up 4 2/3% this week. Number 3, it's the lumber contract. Also, in fact, this is all March with the exception of one. Lumber up 5 3/4%. Our lone exception, we're going out to May for sugar, listeners. Number 2, up 6.02%. And the big dog this week, I have a feeling Carley will have a thing or two to say about this. Nat gas, that March future up 19.1%. Now, take some of that with a grain of salt. It is, after all, a lower priced underlying. You're talking flirting around the $3 level, but still, nat gas the beast. So, Carley, amongst our top 5 this week, what is catching your eye?
Well, no surprise there. Natural gas has got our attention. There's a lot of things going on in this market. I think what probably sparked a lot of the last round buying, the late session buying, well, let's just say the last week or so is what I'm intending to say, is kind of a political nature. We've discovered that the new administration is going to be very proactive in marketing liquefied natural gas, which is something that the market hasn't been able to capitalize in for quite a while. And so I think that kind of flipped the sentiment. That said, that along with obviously weather concerns, I think weather concerns this time of year are generally short-lived. They can get a little bit crazy. We're seeing the same thing in wheat. The wheat market rallied and gave some back because it usually what we find out is the weather's not quite as bad or and doesn't utilize as many resources as maybe the market prices in advance. And so we come back off. So I actually think it's probably going to be a selling opportunity, not for the faint of heart and not for most people, maybe a paper trade.
Speaking of paper trading, might be the best way to approach what I was just talking about, ethanol. Carley, do you recall those heady days? It doesn't seem like it was that long ago when ethanol was going to solve all of our energy problems. It was going to solve all of our dependence on foreign oil. It was going to be a native subsidy to our farmers and provide demand for our crops. It seemed like just the perfect panacea, the solution to all of our problems. Not so much as it turned out. Carley, do you recall those heady days when ethanol was going to solve all of our woes?
I do. I remember them well. I remember the grain rallies that followed that story. Unfortunately, as a society, we really haven't found a way to move away from fossil fuels. I mean, we go in and out with different ideas, but in the end, it's always fossil fuels that are doing the heavy lifting.
Yeah, no real substitute yet, and all this drill baby drill is not going to push us away from fossil fuels anytime soon, listeners. All right, to the dark side, to the red we go, listeners. And now, of course, if you were short these, then you probably have a big smiley face this week. We start off in dairy, listeners. Class 3 milk off 3.53% this week. Number 4, we have one of the EMs, the two EMs, kind of just beset by problems and a lot of downside these days. Today we have a uranium, listeners, coming in at number 4 off 4.36%. Number 3, keeping it in the dairy, dry whey, not a contract. We talk about that often, but it's moving this week off 4.39%. Number 2, getting precious again, it is platinum. And these were all March with the exception of platinum, which is the April contract off 4.82%, and uranium, which is, I think to put it charitably, a less liquid marketplace going all the way out to September on the uranium front. And then our number 1 downside mover, lighten up the tape to the red this week, listeners, good old orange juice going all the way out to May this time. The May contract off nearly 11%. 10.88%. Of course, we had those cold blasts. We saw some interesting action in OJ over the last couple of weeks. Now coming down the other side of that off nearly 11%. Carley, we've got dairy, we've got uranium, even got a little bit of OJ. What's catching your eye in our downside movers this week?
Orange juice is very interesting to me. And the reason I point that one out, obviously, it's the biggest negative mover. So that's obvious. But and a bigger piece of the puzzle is the orange juice is traded on a different exchange than most commodities. It's traded on the ICE exchange. And for whatever reason, it doesn't really make a lot of sense, but the softs complex that's traded on the ICE exchange, so coffee, cocoa, orange juice, they were kind of the last holdouts for commodities. Like, a couple years ago, commodities boomed and then they busted almost all of them across the board, except for those markets. And we're finally starting to see that come to roost in orange juice. Orange juice was at $5.50 in December. Now we're in the mid threes. So we've dropped a couple dollars in a short amount of time. And I have a feeling that we're going to see the same type of pattern in cocoa and coffee, because in the end, when it comes to commodities, high prices cure high prices.
Interesting stuff. Speaking of interesting, our chat has been completely derailed by your comments about gold, Carley. So
yeah,
they're
gold.
they're talking about burying gold in their backyard now. All sorts of fun going on. So let's just get into it. I know it's not moving and it hit some intraday highs recently, not exactly moving and shaking net total to make our top or bottom 5 this week. But if you want to get into that a little more, let's get into it. Obviously, it's fascinating a lot of people right now. Gold in and of itself hanging out near all-time highs, threatening that 3K level, that seminal level. A lot of people have been keeping an eye on, yet you're not convinced. Tell us why, Carley.
Well, there's a lot of things that I'm thinking about here. For one, the market is behaving almost identical to how it did in 2011. And there's a couple things that are sticking out for me. And during the financial crisis, before and after, we saw 3 really big rallies in gold. Then it topped out in 2011. At the time that it was topping out, the miners, the gold miner stocks, were not following gold prices. We're seeing exactly the same thing play out. This is the third of 3 big waves. And we're coming up against some technical and psychological resistance at 3,000. But what makes me really nervous is we've been getting a lot of phone calls of, people and emails. And, I chatted with people at the Money Show. They have gold bullion. They have physical gold bars, some of them multiple bars. It's really difficult to sell those bars. So they'll let you in, but they won't let you out. It's really easy to buy. It's not that easy to sell. The only way to really lock in your prices in a timely manner, if you're a gold bullion holder, is to turn to the futures market and sell what they call selling paper. And you can lock your price in while you get your gold assayed, which is basically certified to make sure it's of appropriate quality. You might have to melt it down and sell it to multiple buyers because not everybody has the capital to buy $300,000 bars. That's how much a single bar is at this price. So it's actually very complicated and very illiquid. And I think the futures market's probably going to end up paying the price for that. In 2011, we saw the exact same thing play out, and gold dropped 45% over the next few years.
Yeah, you're right. In fact, our chat's talking about storing physical gold right now, but you're right. Actually exiting that trade when you want to might be a little bit challenging. You have to go knock on the door of your local gold or bullion dealer, say, hey, I have these coins or whatever you might have, grandma's jewelry. And then they have to, okay, well, maybe my spread's a little wide now. You got to hit that bid at the end of the day. It's all sorts of nuances, which you're right. Is you see the gold futures number, you say, oh, that's great. I could exit at this price, but good luck doing that in the physical gold world, which is a challenge. Of course, a little bit more difficult than just the old, I see people talking about burying gold. It just reminds me of, I think there was my old home state of Connecticut. They had a governor who actually went to jail for burying gold coins in the backyard, Carley.
Wow.
He was getting paid bribes in gold coins, and genius that he was, he decided to bury it in his backyard. Sheesh. And go figure, they found that out. That would have been fun when the governor of the state shows up to the local pawn shop saying, hey, can I sell my gold coin?
Yeah.
Someone might have noticed that, I think, if that happened. But I don't think he planned it out too far in advance. But interesting. All of our gold bugs, I will now direct their hate mail fully to you, Carley, and you can handle it. It's funny. It used to be back in the early days of the network. That was definitely our most touchy audience by an order of magnitude. You said anything negative about gold, you were in peril. They would come at you. These days, it seems like that audience has kind of been usurped. There's a lot of crypto heads out there who get pretty sensitive about some of their and also the last few years, we saw the equity folks, the equity meme stock folks. They really seem to take over as well, where it got to the point where if you question some of the valuations of these ridiculous meme names, it was anti-patriotic of you to how dare you question that GameStop's trading $300. How dare you? So
I know. Well, money's emotional. Honestly, I'm used to it. My skin is pretty thick at this point. So let me have it.
So yeah, get over there. Get at Carley on Twitter. Be polite. Be respectful at the end of the day. We're having a fun. And luckily, we only attract the good ones on the I can't speak for the broad Twitter sphere, Carley, but for our listeners and our audience, they're usually a bunch of good eggs. Let's keep rolling out here. Let's see what's lighting it up. From an overall volume perspective out here in the trading pits today, listeners, let's expand our horizons. Let's do a top 15 just for fun. Why not, listeners? Because we got stuff lighting it up all over the place. Chances are, if there's a complex you're interested in, it's putting up some numbers today. Number 15, we're kicking things off in FX. How often do we say that? But to the Japanese yen we go. It is the March contract, 117,000 contracts on the tape. As of showtime, obviously, listeners, these numbers are going to change throughout the day. Number 14, this is a product that might be near and dear to a lot of our listeners. Maybe we just talked about it. It's gold, the April future, 145,000 contracts on the tape. Listeners, number 13, back to FX we go. It's the Euro March contract, 143,000 contracts on the tape there. So FX coming hot and heavy today. You don't see that too often. Number 12, to the world of ags we go. It is corn, the May contract this time. Going a little bit farther out to May, 176,000 contracts on the tape in corn. Number 11, another one of Carley's favorites. It's our old pal WTI, the April contract in WTI. 220,000 contracts on the tape. Number 10, to the world of rates we go. Man, we're all over the place already. Only done the 5. Number 10, it's the 3-month SOFR, the March contract, 231,000 contracts on the tape. Number 9, we got another one of Carley's favorites, the Widowmaker itself. It's March Nat Gas, 273,000 contracts on the tape. And, just for fun, some people have asked us, these numbers you talk about, how do they relate to the totals throughout the day? Obviously, we don't know the totals for today, but we can pull up the totals for, let's say, Nat Gas for yesterday, listeners. And you could see Nat Gas, this is something I've talked about on TWIFO a lot lately. Nat Gas, very front-loaded, very front-heavy. You see that in the options, 45%, 50% sometimes of the options volume in an explosive week, 1 million plus contracts expires in one day or a couple of days. We're seeing that in the futures as well, very front-heavy. Yesterday, the March future and Nat Gas did nearly 300,000 contracts, 291. And then April, 203,000, May, 122,000, and so on and so forth, all the way out to September, where it kind of drops off a cliff. A total of nearly 1 million futures contracts on the tape yesterday, 971. So when we're talking about the numbers here today, we're just talking about the most active contracts in each of these particular. Nat Gas as a total has obviously done more than just 273. All right, number 8, back to the rates we go. The March contract, 292,000 contracts on the tape. Another thing to mention with this list, we try to purge the smaller contracts that tend to distort things like the micros. So there's no micros on this list. If we included them, they would be in the top 5 here as well. But we only go to the E-mini. Number 7, we have the NASDAQ E-mini, the March contract, 389,000 contracts on the tape. Number 6, back to the rates we go. The 30-year bond, March, again, 431,000 contracts on the tape. Number 5, the Ultra 10-year, March again, 560 on the tape. Hope you like some rates, listeners. Number 4 is the 2-year. March again, 651 on the tape. Number 3, a brief dalliance to the equities. It's the S&P E-mini. March once again, 753, 750,000 contracts on the tape in the E-mini today, just in March. Number 2, back to the rates we go. It's the 5-year note, 1.4 million. And then number 1, you know it, you love it, maybe you hate it. It's the 10-year note. Again, the March contract, something similar. We did a little bit of analysis. Some folks have asked about the 10-year as well. This one, not quite as evenly distributed as we saw with Nat Gas, where it kind of had paper going out a long ways. In this case, it is very front-heavy in the 10-year as well, as we recognize today. Today, obviously, 2.1 million contracts going up in the March contract. Yesterday, the total volume in the 10-year complex was a little over 2 million. That was 1.8 million in the March contract, about 200,000 in the June contract, and not that much really beyond that. So interesting stuff out here. Carley, we covered just about the entire spectrum of futures. What did we miss? Maybe a few more ags maybe out here, but not much really. We covered everything. What's resonating to you in our list of most actives today?
Just a couple notations on some of the stuff, like to understand where these numbers are coming from. So, for example, obviously the 10-year note is extremely liquid. There's 2 things that are working in favor of the liquidity there. Is one, it's used by institutions and banks to hedge their price risk. So that's a lot of the volume that's going through. And also the 10-year note is a relatively low margin contract. So as a speculator, some of them don't care if they're buying or selling contracts on gold, natural gas, whatever it is. They just want it to be moving and they want their signals to work. And so they're just finding low margin products. And so that's generally the treasuries fit right into that category. And then you might be looking at something like the S&P 500 and the NASDAQ, which have relatively high margins. S&P margin, it fluctuates, but it can be 13 to 16,000. Sometimes it's a little more, sometimes it's a little less. That's a really high margin. But the reason you see the huge volumes is there's day traders in there. A lot of brokerages offer day trading margins of $750 to $1,000. So people can get in, even if you have a $2,000 or $3,000 account, you can go in and sling some S&Ps back and forth and run up those volume numbers. So nothing shocking, just kind of adding some context.
I was just looking at our chat, and Carley, you'll be happy to know one of our listeners has a hookup for you. He has a friend who owns a pawn shop, so if you want to sell your gold at spot, Perfect. He'll take it off your hands. So listeners, join up in our chat or reach out to us if you too want to sell your physical gold. I'm going to overwhelm this dude with metric tons of gold out here.
Right. I worry, though, like as you're carrying it from your trunk into the gold and silver pawn shop or whatever it is, there's a little bit of risk there.
Yeah,
They're usually not in the nicest neighborhoods.
There's delivery risk, certainly, on that side. Hopefully you're going armed or maybe with a few friends, let's just say, out there, which is kind of funny to me. Really quickly, we'll run down what's lighting it up on the trend-wise so far, the trend meter in futures for the year. Listen, it still is early in the year, and it's kind of interesting to see how these markets are shaping up. Some markets have already had good years or terrible years, and we're not even through February yet, just midway through February. Let's go to the red this time. I mentioned the EMs having a rough year, and you can see that here, listeners. Number 5 on our list in terms of year-to-date losers, we've got lithium off 9% so far this year. Right above it, number 4, we've got uranium. Again, the EMs just beset with problems this year, off 10.3%. Number 3, we've got our old pal Dry Whey. We were just talking about it earlier. That's off 14.5%. Number 2, we've got Ether off nearly 21%, 20.75%. Man, that one hurts for all the Ether heads out there who were hoping this was going to be the year that Ether was going to catch up, at least make some ground back on its outperformance that other products have had against it, like Bitcoin and Solana, and instead it gives up almost 21%. I don't think the ETH heads were looking for that this year. And then our old pal OJ off nearly 27%. Carley, what are your thoughts on how these trends to the downside are shaping up so far this year?
Well, obviously those are some pretty ugly numbers, but as you mentioned, the year is young. Things can come back. With orange juice specifically, I would say, unfortunately, if you're an orange juice bull, pain's probably going to be a little deeper than we've already seen. Normally, it's been just a wild couple of years for a lot of commodities, but orange juice was not spared. There were some weather concerns and freeze issues and all kinds of stuff. Orange juice probably in a normal environment should be somewhere under 200, probably 150 to 170. So maybe a little further to go on OJ.
Let's see if we have further to go on the upside, listeners. Number 5, lighting it up to the upside this year. We're going metals, but not precious this time. We're going base. It's copper, up 13.4%. Number 4, we were just talking about it earlier in the show. It's steel, having a good start to the year. I wonder why, up 15.14%. Number 3, to the ags. It's soybean oil, up 15.75%. Number 2, you've heard about this before. We talked about it before. You've heard of people talking about earnings for names like Starbucks and others. It's coffee, a banger year last year. And unfortunately for all you folks out there who like a little bit of cold brew out there, not looking much cheaper out here this year, listeners. Coffee up 30.33% so far year to date. That's a banger. And then Carley, your baby, your favorites, the Widowmaker itself, Nat Gas, up 35.25%. Anything catching your eye in the upside trend so far playing out this year, Carley?
Well, we already discussed natural gas, so I'll throw coffee in there. To be 100% transparent, we started kind of toying with coffee a little bit early on the downside. For example, we put in some risk reversals together. I know this is a future show, but we're playing the downside with lots of room for error. We're a little underwater on that, but the reality is coffee is probably a little over its skis when it comes to speculator positioning. Seasonality tends to roll over right around now. So we're getting into the time of year where the bears start to come in and start selling into weather rallies, this is what we've been seeing. Lastly, one kind of odd thing that we noticed, the gold and coffee, they've kind of decoupled in the last couple of days, but as of last week, they were moving together 96% of the time, which just makes no sense. If someone can explain to me why coffee and gold are moving as if they're the same asset, I'd like to know, because I can't figure it out. But they were, and it tells me that it was probably algos and speculators kind of with the same inflation story or tariff story or whatever it was running it. But those types of things are generally unsustainable. When you see markets that are unrelated, that correlated, it's a red flag that things are overheated and the trend is probably on its last inning.
The much ballyhooed gold coffee connection. You haven't heard about it, Carley? It's the same crowd. The latte crowd's also going buying some gold at the old pawn shop. They're driving it up. So it's a twofer out there. You go buy your latte in the morning. You go buy maybe you buy those Costco gold coins. And then there you go. You have a good day ahead of yourself, listeners. Are you part of that gold coffee connection? Hit us up. Let us know. Speaking of letting us know, it is time for you folks to take the reins. A little bit of the old futures free-for-all.
Ring the bell. It's time to take on all comers in an epic Q&A battle royale. All questions can enter, but none can leave without an answer. It's time for the Futures Free-for-All.
All right, everybody, welcome to the Futures Free-for-All. People are always hitting us up with questions on this show. Of course, if you folks are in the live, you took the time to listen live, so you get pride of place if you have any questions. If you just want to grill Carley on why she hates gold so much, have at it. That is your prerogative over there. But we'll get to this question right now from, appropriate. We're just talking about coffee. Drip Java. He's part of that coffee gold connection out there, listeners. He says, been listening since episode 1. Well, I appreciate that. It's not quite as impressive with this show as it is with some of our other shows that have been running for over a decade. This show's been only running for about 6 months or so. But we appreciate all you listeners who go back all the way to episode 1. He says, so many products to choose from in futures. Outside of the stocks, so I'm assuming you mean obviously the indices, which do you think are the best for beginners? You know, we've had different variations on this theme come in a few times, Carley. It's an understandable question. People are just starting to come to grips with these markets for the first time. A lot of our listeners are option-centric, so they're taking their first new steps into the world of futures. Maybe they're a little bit spooked, a little bit intimidated. Stocks are obviously, the indices are obviously a good starting point for a lot of them because they follow them. But Drip Java wants to know, outside of those, what do you think are the best futures products for newcomers?
Where new traders tend to get into the most trouble is underestimating the leverage that's involved in futures trading. Even if they understand it, they don't fully appreciate it until they feel its wrath. And so what I suggest is sticking to the very small contracts, the micros and minis. For example, there's mini grains, wheat, soybeans, corn. The mini contracts are only 1,000 bushels, so you're only going to make or lose $10 per penny. And that's a size where most traders, you're going to get a little bit of the emotional aspects of it, but it's not going to ruin your life if you're wrong or if you have a losing streak. So stick with the minis and the micros, and I think you'll be fine. There's also micros in crude oil and gold, which are really great for beginning traders.
Yeah, we were just talking about gold. Gold clearly has our listeners fired up. So gold, certainly a good starting point. And again, as Carley mentioned, there are these smaller, more bite-sized contracts out there. You don't have to go bite off 1,000 troy ounces anymore or anything along those lines. You can get much more bite-sized, pun intended, contracts for you out there. I got another one here. This comes from Ben, just Ben Thompson, so no fun handle, but we'll take it. Mr. Thompson wants to know, tax season is upon us. Yes, it is, unfortunately. He says, I know that stocks offer long-term and short-term capital gains, but is there something similar for futures contracts? And how do you hold a future over the long term when they typically expire in 1 to 3 months? Well, even that is long. A lot of futures contracts are obviously intraday in terms of the holding period. So yeah, this, I just realized, Carl, I don't think we've touched on 60-40 on this show before. So it might be a good subject for a future episode. But that said, if you want to give our listeners kind of the bullet points on 60-40 tax treatment for futures, have at it, Carl.
Absolutely. This is a really important thing to keep in mind. So if you're an active trader, a day trader, scalper, or even a swing trader, futures are definitely worth a look because we will never, well, let me just start with this. At the end of the year, you do not have to report each individual contract or each individual trade, the outcome of that. Whereas if you're trading stocks, you do. In futures, you're only going to report one number to the IRS. It's on a 1099-B. It's how much you made or lost. And that number is going to be taxed at a 60-40 blend between short-term and, I think it's long-term and short-term rates. So you're never, even if you hold it for 10 minutes, you're not going to be have to worry about, is this a long-term or a short-term capital gain? Because in futures, it's not impossible, but very, very few people hold a position from 1 year to the next year or longer than a year. We're usually talking days, weeks, months, not years. So you're always going to be taxed at the same 60-40 blend, regardless of how long you hold it. Another key to keep in mind is I get a lot of clients that call me and they want help selling some of their winners or selling their losers for tax reasons. Never do that in a futures account. In a futures account, everything's marked to the market. It doesn't matter if you have the position open or closed. They're going off your account balance on December 31st. So it's inconsequential if your position's still open or not. So never buy or sell anything at the end of the year for tax purposes in a futures account. You're just paying commission and causing yourself some slippage harm for no reason.
Yeah, it's interesting. We haven't had a chance. The show is still so new. We haven't had a chance to get into all the nuances there. I know it sounds fun. Taxes, listeners, people's eyes glaze over when you talk. It's probably another reason why we haven't gotten into them yet in the early days of the shows, but it might be worth a future investigation. Obviously, 60/40, Section 1256 tax treatment, all of that good stuff out there, listeners. But yeah, it makes sense if you think about it, listeners. Futures, it's hard to have a long-term holding period for a future, so that they kind of ease things 60/40 tax treatment across the board out here. Well, we'll come up against it, but you know what? We've got just coming in right under the wire for you here, Carley, from the queen herself, good old options queen. She says, you made your thoughts on gold pretty well known. She wants to know, what are your thoughts on silver here, Carley?
Ooh, silver's a tough market. It's a market where hopes and dreams go to die. That's my best explanation for it. We've seen gold perform very well over the last handful of years, whereas silver has done just fine, but it's a much tougher ride. The odds of somebody actually catching a trend in silver are not that great. If you look at a chart, it's very easy to get stopped out. If you don't have stops, you might suffer a $2 or $3 drawdown. So to be honest, I've seen very few people actually come out ahead in silver. It's just a tough market if you're trading futures. You might, if you're going to do something in that market, maybe consider, and I'm a futures broker, so keep this in mind. If I'm telling you to consider a different product, it's probably legit information. Maybe consider something that's not leveraged and moves a little slower that represents silver, maybe an ETF or something. Silver is a tough market. That said, I will give you my opinion because you asked for it. Take it with a grain of salt. It's not a market I follow nearly as closely as I do the others. But when I look at a monthly chart, I see a very heavy pivot line comes in right around 33.50 to 35.50. So it's possible we see 35.50, but I have serious doubts on whether we can get up above that mark and continue higher. If we do, mid 40s are in play. The all-time high of 50 might be seen, but I wouldn't put money on it. If I would paper trade it. If you want to be long silver, paper trade it. I've only seen one time in silver where it had a rally that was sustainable and is in a situation where people could actually make money on it, and that was in 2011, and we haven't seen it since. So, sorry to be such a Debbie Downer. It's not a market that I am comfortable really suggesting that people participate in. It's a tough one.
Wow, tell us how you really feel, Carley. You're not holding back on the metals folks out here. What was that? Silver is where hopes and dreams go to die. I like that. That's good.
It's tough.
We had the fun debate with you and your nemesis, Mr. Dr. Vix. We might have to get you on with our resident silver bull, Mr. Uncle Mike, and you two can go toe-to-toe out there on your different opposing outlooks for silver. I like it. My listeners, let us know if you'd be intrigued by that. Uncle Mike, he could be a vicious one. I'm just kidding. He's a pushover entirely. So you'll probably wipe the floor with him, Carley. But it might be fun to talk about it because, yeah, metals are clearly they resonate with our audience out here, listeners. And of course, you're right. Folks can play it if you like metals, but maybe you're a little bit intimidated by getting in on the futures just yet. You like listening to a show like this. Metals have a great entry point in terms of, obviously, GLD and SLV. They hold the physical. They don't suffer from a lot of the issues a lot of the other ETFs do in trying to replicate an underlying futures position. So they're good starting points. You can put them in securities account. You can trade options on them. A lot of cool things you can do with those. But yeah, metals are clearly resonating with our audience. Well, Carley, you gave a lot of our listeners a lot of food for thought today, especially in the precious metals, and of course, your very intriguing coffee and gold connection. If folks want to talk to you more in a very civilized way about all things metals, where should they go? What should they do?
Well, they can contact me even in an uncivilized way. I'm perfectly fine with that. You can find me on X or Twitter at Carley Garner, or you can visit our website. It's www.DeCarleyTrading.com. It's DeCarley trading.com.
Oh, our chat's down for a little Uncle Mike versus Carley. We might have to revisit that. Bring back I don't know why you get stuck in all of our debate episodes, but it seems like it makes good listening for our listeners. It might be kind of fun. So there you go, listeners. Let us know if you are intrigued. Seems like you are, so we might have to make that happen out here. In the meantime, that is going to do it for us on the Futures Rundown. Also going to do it for us today on the network. If you need more futures info in your lives, join us again tomorrow. This week in Futures Options, very much a sister program to this show out there. We talk about the futures options side, obviously, but you can't talk futures options without talking about futures, so we get into all that fun over there. Who's going to join us tomorrow? We got to tune in to find out. And then, of course, we'll have the option block tomorrow as well with our good buddy, the Flow Master, breaking down all the weird, the wild, the crazy stuff going on in the world of options. Friday, of course, Vol Views. Who will join us there? Again, got to tune in to find out. Been some great guests on that show recently. And then, of course, one final time for the week, exclusively for our cool friends hanging out in the pro. We come back with our good buddy, the options guy, is going to join us. I would bet heavily, listeners, he's going to talk about some straddles. I'm just going to put that out there. Brian's obsessed with straddles these days, and they've been actually working out pretty well lately. So we'll see what straddles he has in store for us and a whole bunch of other crazy, unusual activity coming up on Options Oddities. Only place to get that, theoptionsinsider.com/pro. Then we're back again next week with our usual array of content till we're back again next Wednesday, another episode of the Futures Rundown. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.